There are so many traps for the unwary here. What can our viewers advise their clients who want to do a rollover as a business startup?
Well, you got to really be very careful and make sure to dot all your I's, cross all your T's. In this case, for example, the corporation wasn't even in existence. The corporation that made the investment wasn't even in existence when they took the IRA distribution. So how could you have the rollover to start with? So you can see the great difficulties that you can get in.
Well, on the one hand, you say that there's supposed to be a written plan. But on the other hand, one participant plans with assets of less than $250,000 aren't required to file an annual return for the plan, are they?
Well, that may be true, but there was no plan. I don't know how many times I can say this. There was no written plan. There was no plan to file the 5500 EZ form. But I think it does bring up an interesting question, because when you do have a ROBS, you have to file the 5500 form regardless of the amount of assets in the account, because it's not an individual owning the account, it's the business, and therefore that $250,000 filing exception doesn't apply.
So does that mean that you can't or you shouldn't use a rollover to fund a business?
Well, as I said earlier, technically it can be done, but there are so many problems that can arise. First of all, the IRS does use extra scrutiny on these arrangements. They haven't said they're prohibited or abusive or anything like that, but they are looking closely at them. That's one issue. And then certainly, as we've just discussed, if you do something wrong, the consequences are very severe. A complete taxation, penalties. So my advice is, this is a very, very last alternative for finding capital.